Hi folks, welcome to today's Bobcast. I'm Bob Benny.
I'm Jesse Thompson.
And we're both certified financial planner professionals with Bob Benny Wealth Management right here in Lincoln, Nebraska. And today's topic of our Bobcast is part 2 of an explanation of the big beautiful bill that was signed into law last week. This big beautiful bill we think indeed is great because it's going to help individuals, it's going to help the economy, and it's going to help the stock market.
We just wanted to explain some of the things that we think will apply. The bill is like 800 pages long. There's a whole bunch of stuff in the bill. But we just wanted to explain some of the stuff that we think will directly apply to our clients.
So in this, if you want to hear about part 1, go back to last week's Bobcast, and that was part 1. But part 2, one of the things that we're going to talk about is they reduced or they increased the gift. The bill increases the gift and estate tax exemption amount from about $14 million per person to $15 million per person next year, and will be made permanent, going up with inflation annually. It doesn't seem like that big of an increase. However, because it's made permanent, if it hadn't been going to be made permanent, those numbers would have been cut in half. So that's all good. Year. It's a pretty big deal.
Yeah.
For wealthy
So
people.
a lot more people would have to worry about estate and gift taxes than they do now at this point. So the second thing that we want to talk about is changes in ways that you can save for your kids and grandkids. And so one of the things that has been kind of a buzz about the one big beautiful bill is the Trump accounts. And so I'm going to kind of talk about those first and how they work. Basically, they're a new type of account for kids that can be open for any kid under the age of 18. Anyone can contribute to the account $5,000 a year. It's not a tax deductible contribution like it would be if you contributed to like an IRA. But the kid doesn't have to be working, which is an advantage. It can be a little kid.
It can be your money.
You can start
it can be a baby.
Yeah, and that money is tax deferred until the kid is age 18. At that point, the account becomes theirs and becomes basically an IRA, but there's some different rules and things like that that I think will continue to be clarified on what they can spend the money on, because there's provisions for like if they want to use it for college or if they want to use it to buy their first house, things like that. So the bonus thing about these types of accounts that's interesting is that for any newborn between this year of 2025 and 2028, the government will put a starter investment of $1,000 into these accounts. So as an example, the way that compounded interest works in these accounts, if you just open up an account with $1,000 invested in an S&P 500 fund that gets 10% a year, by the time the kid is 60, that account will have over $300,000 in it just from sitting there starting with $1,000. So to me, that is kind of a no-brainer for children that are born between 2025.
Starting with the $1,000 that the government gave you free to put in the account.
Yeah, even if you didn't, nobody added anything to the account.
Yeah.
And so that's interesting. Another thing about these accounts is that they have to be invested in index mutual funds or ETFs that track an index. For an example, an S&P 500 index fund. So they're betting on the stock market also.
Pretty much is a lot of the way that we invest money is in index ETFs. Mm-hmm. So that's a good thing. So then what about college savings plans?
Yeah, and then there's some small changes to college savings 529 plans. There's a change that just happened actually in our state, where in almost every other state, you are allowed to use 529 money to pay K through 12 expenses if your kid went to a private school. That wasn't allowed in Nebraska. That's now allowed in Nebraska. And in addition, you can use up to $20,000 of 529 money to pay for K through 12 expenses for tuition, but also just other expenses for like tests or supplies or books or things like that, which was a thing that you didn't used to be able to use a 529 for.
So the other very significant part, and I think maybe one of the most important parts of, at least for our business, the big beautiful bill, is regarding businesses and corporations. So the big beautiful bill makes the corporate tax rate now of 21% that we have right now, it makes it permanent. It was scheduled to go back up to 35% prior to the passing of this bill, because when it got passed originally by the Congress and the House and signed by President Trump in 2017, lowered the corporate income tax rate from 35% to 21%, and that's a large part of what has stimulated the stock market so far, or ever since then, is companies get to keep more of their own money. Taxes are a cost, they're an expense, and when costs or expenses are lowered, profit increases. When profit increases, companies' values go up, and so that's what has been happening. Well, what was going to happen if this bill hadn't been passed and signed was that cost was going to go up from 21% of their profits to 35% of their profits. That was going to, to 35%. That was going to hurt the stock market and hurt the values of companies. So that's just great. A second thing that's a benefit to business and corporations is the qualified business income deduction of 20% was made permanent. That's a big deal. In addition to that, they have a 100% bonus depreciation is extended until 2030. That means that companies can invest money and not have to in more buildings and equipment and stuff like that, and not have to depreciate it. They can take the entire investment and deduct it off of their income right now. That's another great thing for corporate profits. And then the final thing that's a benefit for companies is that research and development expensing can be deducted immediately, not have to be spread out over years. These are really big things for companies, and they're fair, and they make it so that companies' costs go down and profits go up, which buoys the stock market, makes the companies worth more money. And so that's great for our customers and for anybody that has a 401k or any kind of investment in the stock market.
Yep. So we hope these two Bobcasts have provided some clarification on things that might apply to you from the One Big Beautiful Bill. If you have any questions on anything, please reach out to us at jesse@bobbenny.com or bob@bobbenny.com. And we hope you have a great week.